Good morning, it's Bryan over at Cross Country Mortgage. Hope you had a great weekend. I wanted to share some information with you about refinancing today. We've had lots and lots of people inquire about refinancing. They've heard rates are going up and did we miss the boat? Is it a good time to refinance? And I think that there's a lot of misinformation out there about why you would refinance, and interest rate is just one of the variables. So wanted to share a little bit of info about what other pieces to the puzzle there are that we could help with that would go into making the decision to refinance. Just because you could lower your rate does not mean that it makes sense for you to refinance. Unfortunately, most people don't ever get any advice around refinancing. And it's just like if you have heart disease and you walk into McDonald's, they're not going to tell you to not order the double quarter pounder with cheese. They're going to happily take your money, hand you the burger, and you're going to slowly kill yourself. It's the same thing with the mortgage. You walk into your local bank, you see rates are low, they're not going to ask you any questions, they're going to conduct the transaction and you might have a lower interest rate, but ultimately the total cost is going to be more over time, and depending on what your goals are, it may not have made any sense whatsoever for you to refinance. So what we want you to understand is you have to look at everything. What kind of mortgage are you in right now? Are you paying for mortgage insurance? What's your home's value compared to what it was when you purchased the home? Do you want to pay the home off faster? How long do you plan on staying in this home? And what other debts do you currently pay every single month? What we find is that a lot of times people are asking about lowering their interest rate on their mortgage because it's quote unquote unaffordable for them. In other words, there's a lot of monthly payments that somebody's obligated to, and because the mortgage is the biggest expense for most families, they want to lower the interest rate and in essence lower the monthly payment on the mortgage, which kind of makes sense. Like mathematically sounds like it would be good, but some of the clients we work with, we took their other debts and factored that into the equation, and we might have taken a small portion of equity out of their home to pay off debts that were easily costing them $1,000 or $1,500 a month. And yeah, their monthly mortgage payment might have gone up a little bit, but now all of a sudden they're going to be saving that $1,000 to $1,500 a month for the next 2, 3, 4, 5 years. A lot of the times this has to do with student loan debt. It has to do with credit card debt. It has to do with just all kinds of other debts that, unfortunately may not be able to be paid off in a short period of time. So if there is equity in a home and we can use that to the client's advantage, it might make sense to do that. Now, I'm not a huge advocate of taking your equity and paying off other debts, but if there is very little choice based on the situation that somebody presents us with, that may be the best option. My point in sharing all this is you have to deal with somebody, you have to ask questions to a seasoned loan officer that understands these things and will help you understand the best way to get to the outcome that you're looking for. If you've got any questions about refinancing, interest rates are one variable. We can help answer and show you some different ideas that would get you to the finish line. And it might be counterintuitive. It might not be what you think, but it might be a better solution. So if you have questions, give us a call, 847-603-4778.